Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. We are recording Friday afternoon, August 4th. Market's got about a half an hour left to go. My name is Ben Maldonado. As always, I'm here with my partner, Barrie Hederachi. Barrie, how we doing?
I'm doing well. Thanks.
That's good. Little action here this afternoon in the equity markets, which we'll get to.
Yep.
On the show today, Barry's going to cover the usual big five, which is ES, bonds, gold, crude oil, copper, the dollar, and the euro. And on the show, the commodity side today, I'll touch on the 30-year bond, cotton, coffee, crude. It's a small lineup commodity-wise because we got a lot of corrections and pullbacks and congestions that are taking place, but we'll get to that. Let's start with Bitcoin. Speaking of congestions, we continue to sort of bounce along, although on top of that important full square.
Yeah, we held it all week.
All week it's tested. All week it's hanging there. Doesn't mean it's going to hold forever, but for now, as long as we're on top of this, roughly 28,870 area, in my work, it's still bullish. For it to get bearish, we got to get under that. And then, as you and I have talked about for weeks, this trend line is really the key. If we take out that trend line, they may pull the plug on this thing short term. But for now, it's holding the line. As long as it holds the line, there's no threat for a big imminent dump. It's going to have to get through that line before that happens. Anything else to add there?
I think you covered it. I mean, not much to say. It's been slowly creeping down up to that line, and now we're sitting on top of the line. So really, that's really the only focus. If we take out the line next week, well, we can definitely expect at least touch on the line.
It's not exact, Barry, but if you look at the pattern from this high here, it's kind of doing the same thing.
Right. Yeah. And even before that, it did it just at a sharper angle.
Yeah, here.
Yeah, exactly.
Yeah. So this is the pattern. We'll see what the next move is. It's used it to move up multiple times, but it may be a cat on its ninth life. We'll see.
Yeah. I think if that low goes, what is it, that Tuesday, Wednesday lows take out, then I think pretty good shot at touching that trend line.
We'll see.
Yep.
All right, let me throw it over to you. Well, it made its choice in your zone, didn't it?
Sure did. And so there it is. I guess we're done with the ES. Moving on to bonds.
Oh, if it were that easy.
Well, I mean, really, it's kind of simple now because we had the break. Earlier, we had a couple of weeks of just kind of hanging around, bumping up in through here, just kind of holding that line. And really, we just wanted to see which side it was going to settle on. And we can see, we drew up this box last week. I said, we got to, holding above it or breaking below it was really the thing. And you can see how we held above it, a couple of days here, Monday, Tuesday. And then Wednesday, we started to take it out, took out the trend line and everything. And now it's really this 44.75 is the next level of support. And, we've had this 75 here for a while. I mean, before June. And you can see how we kind of spiked and put up a couple of highs around that price level. And at that point, we were making higher lows and eventually we broke out. So now the thing is, it'll be really interesting to see if we're going to hold here or not on this run. The things to consider, and we've covered this, last 2 or 3 shows. If you guys haven't seen them, I would say to go back and catch it, because we talked about all the cycles and the scenarios and what we're looking for and all of that. And it's probably not fair to cover all of that every time. For one thing, the regular users probably get bored. So, right? I mean,
right.
Yeah, I would get bored.
Right.
So if you guys haven't seen it, take a look at that. And at the same time, if you guys like our work, please remember to click the likes and subscribe, and also maybe alerts. And getting back into the S&P, in summary, what we had said was, we had a bunch of cycles expiring right in this box, right in here. And we wanted to see some evidence, if it had traction. we should break lower first. And if we didn't have any traction, then we're probably going to go up for another 45 days or 30 or 45 days. So that was really the thing. And we're not doing that everywhere. We only had to do it here because it was a critical spot from a few different angles. We drew up this box last week or the week before, and before we had a little box right there. So anyway, what happened was we did break to the downside. I guess the next question is, how big is this? Is it the one? Is it the big one?
Mm-hmm.
Right, Ben? Or is it just a little bit of a correction? Well, given where we broke, it has the potential to be a big one. But yet, these are potential. So we want to see what the price action is like on the way down. Technically, I'm not looking at this as like a 1 and then a 2 and this being a 3, although it has the markings of that on there, especially if you get down to a 4-hour. It looks like that. But either way, I'm looking for support around 44.75 to 85, that area, right in here. And if we get that, great. Then what we're going to do is we're going to look for the counter trend where it's going to stall out. So by the book, we should stall out around, 45.70 would be a good mid-range. 45.55, 60 area is another area. We talk about these levels on our 30-minute chart that we post on Twitter. So here's the 30-minute, just to give you guys a quick heads up. We had 46.30 as our resistance. We talked about that last week. What happened was this 45.95 was really the level we were watching. And you can see when we broke overnight, rallied up, it was really, we failed the counter trend. We talk about failing a counter trend. This is what we're talking about, right? Sort of a high came in, great. Let's see if, counter trends can happen anywhere, right? That you could say that's a counter trend, that's a counter trend, that's a counter trend, right?
Right.
But we want to see that critical level. So if you have the right number, then we want to see it fail at that number, not just any old counter trend. So there's a tip for you guys. So here, 45.95 being the case, you can see how price came right up into that and then failed, rallied back. So after we fail at the right level, then, after that, it becomes a little bit easy, right? It failed here, came down to our support level as 45.15 was the next level to hold, kind of held, had a spike here, held, ran up, came back this morning's little new spike, came down to 45.15. We can say it wasn't real stable, right? It was a little bit volatile. And what I put out this morning was, hey, getting above 45.38 would be a good case. That'll be a good start, but we really need to get above 45.54 till we get the bullish momentum in place. So up until we really can get above 45.54, which is that level, which used to be the old support, right? Support here, support here, support here. And the old resistance was there, back in mid-July. And of course, we failed, right? We couldn't hold above, right? The first counter trend slipped through everything, and I guess wiped out all the guys that bought the dip. So you got to be really up on your toes, especially around corners. We don't know if this is a corner yet or if this is some kind of a move that hasn't finished the leg. The reason I said 44.84 is what I have as support on the 30-minute. So we'll just go back to the daily and continue on. So 44.84 is figure 44.85, 44.75 based on the daily. So, support level is right in there is what we're looking for, right? That's what I wanted to show you guys. And what are we looking for next week? We're looking to see if the support holds, first of all, and if it doesn't, and we get stuck under it or whatnot, then we're probably going to go down into this 43.25 range. So that's what we can expect, or at least what we're expecting if it fails 44.75 level. If it holds it, then we want to see if the next counter trend is going to fail again at this. So the lower boundary of that box would be like 45.70. So if it's in that area, we start to fail, or even 45.95. So that would tell us, well, I would be looking to sell that. So that's kind of the thing. We have to treat this now as if we have a high in place until we get proof, through price action that it isn't. And that's the way we're going to frame it and look at it to give us some evidence. How's that? Do you have anything to add to that?
No, just that the resistance held. We've now broken down, so it's watching those counter trends, as you were saying. Watch the counter trends fail. You can do it on lower time frames. I was doing it on the 60-minute. Once we broke that, that 45-50 area, I said, watch a retest there, and we got it today.
Yeah, right there.
Yep.
Yeah, shorter term will definitely give you, all kinds of ideas. And the reason I said, if we treat this as a 1, 1, 2, 3, because look at this looks like a 4, doesn't it?
Yep.
We got this big choppy action. So that's a 4, maybe one more down into clear out the 44.84 area.
And then maybe you get a bounce from there.
Right. And if we don't, then we're going to have a really hell of a 5th.
The tide has shifted. That's the key thing. And I think at the end of the show today, we'll talk a little bit about that, about how you handle that and what sort of mindset and tools you use to do that. But yeah, when the market shift, we have to shift, and it's shifted, right? This week, we gave the warning because of the cycles and all the evidence that we had, but then it's up to price action. But once price action shows you, the mindset's got to shift, right? Well, you get really hurt if you keep the bullish hat on when the market has already turned bearish.
Well, the other thing is we can't, if you're going to trade, you can't really have a mindset because you're trading something else, right? So you have to adapt to what's happening and be able to be aligned with what the market is doing. So
that's right.
And the shift that you're talking about has to happen as the technicals change.
Yep.
Prices, levels, indicators, the whole bit. So anyway, we can talk about that later. Let's go on to the weekly. So weekly chart, we have, we almost got to the 72. So this is almost a done deal.
Yeah.
Close enough, right? That's pretty
For sure.
Close.
I mean, it's within a whisker there.
Yeah. So it's possible. This is what we're talking about. We talked about that. And here, if you look at the 45, we have a nice move getting it right into the square and a half, right? Which is definitely
important.
Definitely important. So weekly is showing some signs. The thing is, it can show signs. What we want to know is if the signs are long-term or short-term. Is that high a short-term high or a long-term high? And these are the things we have to figure out a little bit over time. But in the short term, we can call the turn. I mean, here we have a very strong weekly down bar, right? So that's something to notice. Of course, it comes into right on top,
right into support, right?
Right.
They never make it easy.
Right at about 5,000, right?
Yep.
I mean 4,500. So yeah, well, that would be pretty normal for a pullback on a weekly basis, and we can chug on back up. So the potential is always there. So let's let the price sort of guide us. I mean, that's what this is all about, right?
Absolutely.
And we talked about the prices, so you guys have those, and that's that. Let's go on to bonds. Pretty much according to the plan. I mean, the reason I'm thinking today is more of a, it's possible that we get a bounce off of this is because bonds, broke down. I mean, we're looking from up here after we tagged the line, we got, couldn't get through the box. We were looking for bonds to get weaker. And I think last week we talked about how there's no way that's going to stand, right?
That's exactly right.
And
boom.
And it didn't, and boom. And today, instead of going down here right off the bat, so we're rallying back up. And of course, resistance is going to be around 23.11. 123.11 is really where that line is, the quarter of the square. And we'll just leave it at that. It's weaker, and we're looking for bonds to actually take out this 117.21 low and go even for lower. So for now, this is okay. And so I figure below 123.5 or so, it's expect bonds to be weaker. Not much else to really add.
Nope.
not much to add when things are kind of going as you expected, right? It's
Yeah.
always when something different, you have to figure it out.
Look at that. That big rally today just takes us up close to the bottom of the box.
Yeah, that's why the 123 becomes important, right? It's
Yep.
at the
Yes,
bottom of
sir.
that thing.
Yep.
So I mean, look at the struggle trying to leave the box, right? It's like, oh my God. It's like,
It's almost all year we were in that box. Really, we
yeah,
were all year in the
yeah. Look
box.
at that. That's amazing. The management and maintenance of the
Hmm.
rates, eh? So anyway, we do have this expanding triangle type of price action going on. So let's see if this is it. And I say it again, that there's no way that's going to stop here without checking that out. And if we're going to check that out, there's no way we're not going to come and hit that at the least. So, and I think the real party starts if that gets taken out at some point. You know what I mean?
Right.
So for now, we're kind of dancing around this. So we'll see what happens. So for now, you guys have the numbers for next week. So we'll just go with that. Let's move on to crude, which had a pretty good week.
Nice week.
Coming up to today. Let me
look at that perfect little kiss on your half square.
So there it is.
Yep.
And man,
that's a good example of clearing, Barry. Show them what we mean when we say it has to clear the line or clear the square.
Yeah. Well, I mean, right here.
Yeah. Yeah.
Yeah. Well, I mean, this whole thing is technical gold,
Yep.
We broke out of, we talked about this last year. Like I said, you guys, we kind of add to the story every week. So
right. Just go back if you need to catch up.
What's that?
I said they can go back if they need to catch up.
Yeah, because we talk about a certain aspect of the market or certain, from a different angle every time. So it doesn't make sense. And it's impossible to cover all the angles every day.
Yeah,
I mean, every week. So it's good to just keep up with it or just go back and check something if you're interested in it. Anyway, getting back to crude. So we cleared 73.50. And what Ben's talking about is, we talk about, because mostly these horizontal lines are all different types of levels that we use. And when we talk about clearing a line, we're talking about something, okay, here's 73.50. And we were waiting for the box to clear, get out of the box, this sideways area consolidation and break out and come back like an ABCD, right?
Right.
ABC. So we're looking for that C to come and recheck this level. Sometimes it could be a little bit lower, a little bit higher. And depending on, what that pattern looks like, it'll tell us, well, we're clear now to move higher. So here, when we broke out of the box, we talked about 73.50. If it holds here, then we're going to go higher all the way to 83. And man, just like that, there it is.
There you go.
83, right?
Yeah. That's $1,000 a point too, by the way.
The second one.
10 points.
10 points, yeah. And that did pretty well on the options. So here we have, we're looking at 50% of the square is what Ben was talking about. You can see even that, we ran up there hard, sat around for 2 days, started going higher, came back one more check before going up into 83. So that's why, it's important. You guys can see how we're not calling this high or even this high for a turn. If you notice, we call turns rarely, really, considering this is only once a week.
Right.
Although I might have to call some attention towards a potential high in here, but for now it's okay. Anyway, that was there are two good examples on this leg. We talk about clearing and checking back, clearing, checking back before moving towards the next resistance level, which, you can also call them targets. So that's that. So now what happens next is, and this is a good sign, this holding above the 50%. So if we can somehow manage to be between, let me give you what that number is, between, let's say 78 and 83, then there's a real possibility we take out 83, get on top, and we go to 91. That's just kind of how it works step by step. And I've been wondering if we should revise these numbers, but man, they're working just perfectly. So I'm just going to leave them there. And this 91 and 83 we've had for months and months and months. So they're pretty reliable when you combine it with pattern. And the reason I said that we might want to, well, I want to talk about a potential something we have to notice. Potential issue is this 30-day run, which is half the square.
Mm-hmm.
And a 30-day runs in oil sometimes pan out. So that would be August 9th to 10th or so. That would give us a very clean 30-day run. And those can sometimes, I could say often, 45s are even better, but it's either 30 or 45, then it will go to 60. But 30, it's possible that we run into some kind of a resistance at that point in time and choose to consolidate. So that's something we want to keep in mind as we watch this going into next week. You're covering crude too, right? A little bit.
I'm just going to show something on the weekly, but it
okay.
just looks bullish. Looks really good.
So yeah, we'll just keep it. I'll just put the thing here, and next week we'll check it out. But there is considerable resistance. You can see how we had 83 here before these lows came in. Mm-hmm. And you can see how the 50%, 83, everything's kind of in the same zone.
Mm-hmm.
And I don't think this is something huge, especially if we can clear 83. I think it's in good shape to start moving, because look at this, how many months we were at this base, right? Coming into this low. So it was a very, very long time.
A lot of energy.
And these May lows showed up in a lot of these energy stocks and related stocks, and they all took off. So it tells me this was a good, we nailed that as a time period for many things. And I think we even talked about stocks making good lows, energy stocks, right? So
yes, sir.
So that's there. Now let's look at the weekly. Well, how beautiful is that?
So 6 weeks, man. Boom, 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 boom.
Pretty good. So I'm expecting, it would be just fair to get a, counter trend week in here, right? So that would make sense to go up and hit the 30-day run, run into some price over in an 83 area, and then just correct for a little bit. So again, we're looking at, once we have a break to one side, we're looking for the strength of the counter trend, and we'll see what that looks like. If the market is very strong, counter trends don't really last that long.
And look, Barrie, look at the run up into the high. It's perfect illustration of your point.
Yeah.
Pullbacks were 1 week.
Yeah.
You had 3 weeks.
Well,
there
right here,
the
last pullback before the run up was at one bar.
1 week there. Yeah. 1 week at the start.
Yeah. Right here. Mm-hmm.
And then you go over here to further to the left in like 20 and 21, just 1 week out of like 6 months. If you look at it, or 4 or 5. Oh, there's another one. Sorry, 2.
Yeah, we were on that whole inflation thing back then. Remember?
Yeah.
So this was kicking butt.
But and also look at the color of the candles on the way down. Look at the difference.
Yeah. Well, what happens is then you get the reverse, right? We get the shorter counter trends to the upside. So
yep.
Yeah, that alone is a lot of information that we get. So we'll see how that.
Yeah.
So I think we're getting into the range, like you said, after 6 weeks, I think we can expect some kind of a correction. Mm-hmm. The key there is, basis weekly. If we can hold somewhere above 78, I would say the weekly would be in a very strong position.
Sure.
That's what I'd say about that. And so anything higher than 78, like 79, it's in really good shape. Like I said, these lows came in at the right place and all of that. So I think there's some good trading in the energy markets, and especially crude. I guess natural gas didn't get the email, so we'll have to wait.
But you know what? If you look at what crude did, we went sideways for almost 6 months.
Right.
I was just looking at natural gas, and reviewing it for the show. We've been going sideways for about 6 months.
That's right. Look at this, right? So it's coming. It's coming.
It's coming.
Have to be patient and now that I'm looking at this, might as well drop this trend line.
So it's building the base just like these commodities do, and it's not like it's just starting. We've been in it for 6 months, so
exactly,
its time is coming.
Yep. So let's move on to gold. Another market that was surprisingly strong, went right up into the box. We had, so last week, well, if you guys are watching, we talked about 1940 being support, and what happened next, boom, right back up into the box. And we tagged the top of the box that we've had drawn in for, this is sort of the resistance, and we've sold off. And we'll just leave it at that. If we're going to mush around here, great. But whatever has to happen, we really need to hold above this 1980 level that we talked about last week. Until we do that, it's probably going to just back and fill and do whatever it has to do. The key thing to remember is we have a higher high and a higher low. Right, Ben?
That's it.
That's it.
It's that simple.
And looking at the weekly, we can see where the resistance came from. We have that 2000 that's been sitting here for a while. Really, it's 2000 we have to get above, right? Basis the weekly. If we really want to, run up in a big way. So we'll have to wait and see how that works out. But for now, not much to say. It looks like it's consolidating up in this area, and you guys have the levels based on the daily. So I think that should be enough, right?
That's right.
So 1940, 1980. That's kind of where we're working. All right. Looking at copper, we said basically if we can hold above this 50% line, 282, 280, 380, I'm sorry, 380, we're in pretty good shape. And I don't know if I drew that in last week or not, but that
good
trend
line, good number.
What's that?
I said it's a good line and a good number.
It's a good line, yeah. So far, it's kind of holding pretty well. And if we look at the weekly, we can see what happened at this high. Didn't quite get there, but the key thing to watch really technically is we want to see if we can hold this 380 or not. If it holds it, we're in good shape. And I think the time waiting and correcting will be cut short. If we get through this, somehow get under 380, I think there's more. Not like copper is going to go to zero, but I think what happens if we get under 380 is there's going to be a lot more consolidation, probably back and forth feeling between 350 and 380. So it's going to get into kind of messy. And if we can stay above 380, I think it'd be less messy and more trendy. So let this correction sort of finish up this phase, and we can take a look at it. Looking at the weekly, the thing to notice is right here. If you guys are watching copper last few months with us, you can see, I drew this line in months and months ago. And you can see how important that is, right? We tagged it here, then we came back and we tagged it last week, and this week's high was there. Of course, we had that 50% line at the same time, so everything was kind of, stuck in that same spot. Not to mention our box, right? Maybe I should extend it. There you go. Man, these boxes are almost like a curse. So we went in there. All right, great. What I would and fine. So we made a higher high for the week. Fine, that's a done deal now. This reversal, we'll have to wait to see if that's a normal correction. And as long as we keep holding the lows and long as we're above this main lower fork, I think we're doing okay.
You're okay.
It's not exactly in a blazing bull market, but it's holding its own, and it's checking out these resistance pockets. So if it gets up here again, and it might be able to hold it or maybe even take it out. But we're watching it very closely. Like I said, the 380 is the key number to watch next week. And if we can hold above that, I think copper will be in good shape. Otherwise, probably going to take a little longer.
It kind of reminds me of silver that I talked about last week. It's a bullish consolidation, but it's not screaming higher yet.
Exactly. Yeah. And dollar made it out of the box. Box is this box right there. We got out of the 50%. So I think dollar's off and running off the block. Pull back today, came right into the box. This is okay. If it gets even to 101, remember that's our key number for the dollar. So long as we're holding about 101, 50% of the square, we're in good shape. And the higher further away from the 10 exactly 101, the stronger the dollar is. And this looks okay. It's like normal price action for the dollar. Anything you want to add here?
No, just that, as you said, it looks bullish. This is a normal pullback. Let's see where it ends, and then we can make assessments from there.
For now, we did get to the third of the square, which is that line, 102.70. And so we'll see. Maybe we'll consolidate here a little bit longer. We'll wait and see. But dollar's okay above 101, like I said.
Mm-hmm.
And looking at the dollar weekly, the reason is really okay is because you can see last week, this is the current week, and last week's bar, we touched the 90, top of the 90, and we cleared it. So yeah, if it's not time, you can see this pattern here coming down, and it's possible to mess around a little bit, maybe make a higher low, and then a couple of higher lows maybe, and then it's really buying time, I believe, till maybe end of the year, early next year, but we'll see how it works out. But the key number to watch really is 101 for our direction, for our short-term trading. Anything you want to add there? Or?
No, I think that's a good coverage.
Next, we have the euro. This is the daily. I took out that Gartley that we had drawn up last week. That was a Gartley here, X, A, B, C, and a D. And that was the target. We were expecting it to sell off. Normally, they sell off after they hit a target like that, and we got the sell off. And our support was really this 109 area, 109.5, let's say. And well, lo and behold, it held there. And again, we got this box running through, and it's possible that we're going to probably, this is sort of, wow, look at that. No. So, and we hit the trend line. There's a high, and the third hit. So it's possible that was it, and the dollar pullback was it. How we know that wasn't it? Well, we get outside of the box, and we stay outside of the box.
Right.
That would tell us, and that's what differentiates noise from actually something worth trading. Like in here, you can see we got above, but it really couldn't get above the box, right? It was sticky coming back. And then eventually we saw that it sold off. So we don't want to get caught in those. And here, I think it's the same story, especially since we took out the full square yesterday, right? Yeah. So let's watch it. To me, it looks like a normal counter trend. And especially if we take out Thursday's low, I think we might be done with all of this. Remember, all these corners also had timing coming at the time, not just price. So
they did.
Yeah. So it's important to notice all of that. Looking at the weekly euro, we did have this equal move, this leg matching that current leg. And, that's pretty good. They normally give fairly good signals of a leg ending, especially at the end if we have other timing supporting it. You know what I mean? And here, in case we did. And the really interesting thing is not only did it match it in price, but it actually matched it in bars, number of bars, right? So that makes it really special. So that tells me, at least, the basis, the weekly chart, we have a high in place. So we're just watching the counter trends like we do with everything else.
See what happens.
Yeah. So I think that's
it.
I got here. Yep. Natural gas, not much. It's still making higher lows. Hang Seng. Well, here's something funny. Ben, I talked about this last week. I put in
the half square,
right, 2038, and bang, right to it, and sold off. Very nice sell off. I don't know if there are any options, and if we can play options in the Hang Seng. All right, Ben, talk about prices testing lines. That was pretty good.
This is a beautiful example, right?
We got we got the trend line and the square line.
Yeah. Last week, we ended the week here. We started up in here. And we said, well, as long as we can hold this full square, we're in good shape. it's still bullish like it did here on the first pullback. Tried 5-6 days, held, pushed up. That not bullish, right? We got through on Wednesday. Thursday, we had a full bar underneath. And today, they even tried, man. They pushed really hard and just pushed right into the line. And as Barrie said, the underside of the trend line. And then we closed near the lows. So that's a failure. Now, the key thing going forward is on any rally attempts, do we stay below this number, which is 15,570? If we do, like I wouldn't be surprised if they go back and give it another shot, but 15,570 is the key. We get stuck below here, then it opens up the half square down here, which, by the way, all these levels are on a Google Doc spreadsheet, which we'll post the link to when we post the link to the video. On the bottom side, you're just under 15,000, 14,955. That's this half square here. So
right.
The tide has shifted. We called it out. We said we got to watch and see how it handles this. And for now, this is bearish. So we watch price action continue to unfold. If we fail again at this level, that would be negative. Right? That would be a pretty bearish signal. And taking out sort of this week's low would also say it's going to be a continuation down to that half square. Anything else to add here on NQs?
Yeah, I think to keep the uptrend intact, I think holding above 15,200, maybe 15,200 might be the place to be. If we can hold above that.
Let's see where that is. It's right around there.
Yeah, if we can hold above that, I would say, well, you got that ABCD coming down too. Maybe that could, if it's in the same area, that would be the perfect.
It probably is. Let's see.
Good support. I didn't check that, but
oh
no, we did the ABCD today.
Oh, watch out!
So that might be it right there.
That could be it. Absolutely, could be it.
Flush on Friday, run it up next week. I don't know.
Yeah.
Well, anyway, it's in this area. 15,250, 15,220, right around there is what I have, like a critical shift point. Yeah. So we'll have to see, but definitely we have a sort of a shot across the bow, right? We have to kind of notice this.
Well, and that's the key thing. This is telling a different story than this.
Well, it wasn't just a single, dip and then rally. We have a dip, rally, and then sort of a washout of the older last low,
which is a lower high and a lower low.
So that's why we have to be a little bit extra careful in this.
Yes.
Like we talked about in the S&P, we had a lot of timing that came in. So that's just more reason.
Right. So on the commodities, let's shift over to the commodity side. The grains correcting. I want to see where these lows come in and where we get solid reversals off of them. And then we can reattack and revisit there. The metals, Barrie covered gold and copper very well. Silver's the same. They're kind of in, triangles or sloppy sort of consolidations that have a bullish tilt towards them, but we need to see a little more action there. The ones that we're going to look at today, I want to add one quick thing to what Barrie did on bonds. And I think this is important. This is your monthly, right? And this is your 40 plus year trend line. Look at what this Gartley is doing here on the lows. Kind of saving this thing for now. A couple of hits directly on it there and there, ones that went through it but then got back up above it, and we did the same thing here. So is it possible we get a little bounce in bonds up to 125, 126, or your 123 number? Absolutely. But this equilibrium line off the Gartley, which worked really well, is kind of holding things from taking out these lows for now. So we'll see how it plays out. Bonds are bearish. It's been a good trade. We just wait for the next setup now that gives us another good risk reward shot at the downside in bonds, because I agree with you, it doesn't look like it's over yet. So that's the bonds. Let's go to cotton. Why do I want to show you cotton? Well, long base, which we've talked about ad nauseum on these shows, but the trend line here, look at the low this week. Remember, this trend line was drawn in early July. So a reversal up from here would be, again, another bullish sign. The key thing inside of this consolidation, Barrie, I think you were saying like 82 is super important, that 82 level. The low this week was just on 83, which was right on top of this previous high.
Mm-hmm.
So we're getting nice price action within this sloppy mess, this sideways mess that's, again, supporting the bullish case in cotton. This trend line, I think, is super important. So we want to watch and make sure this holds. If it doesn't, then maybe it's going to signal that we're still back in the chop for a while. If the trend line can hold and we get a reversal, we had an inside bar today, but if we can actually get a reversal and take out Thursday's high, which was 85.40, then this thing could be off to the races. So we'll watch and see. Anything to add to the cotton?
Well, I still stay with the 82. I think long as we can hold above that, momentum will probably be on the bullish side. But if 82 goes, then we're going to have some problems.
Still in chop.
Yeah, and that 82 is from square 9, so it's a pretty reliable in cotton. So
sure. Let's go check out coffee. Coffee is early in this sort of trying to make a higher low, right? We had this low, which we triangulated on, nice move out of the low. We've had this pullback, which, is sort of the second wave. And I'm thinking this low is good here. And it's sort of a, going back to Barry's concept of boxes. If you draw a box in here for the ABCD, it's right in here from a Gartley standpoint. So the price action in this box is good, and we're kind of pushing out of the box. The all clear for me is going to be if we can clear this half square. So call it 170. If we get above 170 and sit on top of that, then I think we've got the one in place, we've got the first pullback in place, and we're set up for a fast move higher out of this structure. What do you, I know you have other numbers in coffee that you've been watching. Where are your key numbers here?
Actually, for next week, I have the exact same number. I have 168.5. So how about that?
Yeah, we're in the ballpark.
It's right there. So
yep.
If we can get above that and really hold above that, we can continue this. Especially after we break to the upside, if pullbacks can hold above that level. But otherwise, like you said, I don't think we're ready yet. Probably burn up a little bit more time. Sideways.
Probably some more time. Yeah. Maybe it triangulates in here and gets into this apex before it goes.
Yep.
But it's one to keep an eye on for sure. Let's see. The last one, as I told you, we had a very, very brief commodity highlight this week, is one you covered, but we're going to look at it a little differently. And here's crude.
Mm-hmm.
Here's crude with the circles. And what I wanted to point out here, we talked about, once we break free of this circle, you usually get a strong move. Well, 2 pretty good weeks. Actually, look at this, 3 weeks closing almost on the high each week.
Right.
It's definitely well bid. But the thing I wanted to point out, we did high to low. We did 81 days into that COVID low.
Mm-hmm.
Remember when some futures went negative?
Yep.
At that low, that was 81 days. If we go 81 days from this high, let's say we did high to low there. If we did high to high here, you're looking at the week of October 1.
Mm-hmm.
And without looking at the squares and just say from a trend line basis, your resistance is right into the area that you were talking about. If we're talking about around October, you were talking about 90, 91. Mm-hmm. And that's right where we would get up into that trend line of 90, 91 at that point. Right. So crude looks super bullish. Of all the commodities, different classes and everything, Crude has looked the best right now. So I think we definitely watch pullbacks. We've had 6 weeks up, so a week pullback, a week's worth of pullback would not be out of the question. And if it does, and it can settle on top of good price levels, crude looks very, very bullish.
Mm-hmm.
And that's it for commodities. The others, I want to see more of finality to what they're doing now, which is choppiness in some, pullbacks in the grains. The metals, we want to see that, continuing the triangles that are happening on multiple levels there. We want to see those things resolve with higher lows and push to make higher highs. But the big thing I wanted to talk about, Barrie, with the turn that we've seen in the equity markets this week, talk about how you mentally switch over from, we've had a 90-day bullish run, or let's say it's a 180-day bullish run, or a market's been one way for a reasonable amount of time, 60, 90, 120, 190, 180 days. How do you change sort of the mentality from, oh, you got to buy the dips in this market, to now I got to look at selling the rips? How do you make that switch over in your mind? Because I know, I think a lot of people have trouble with that, because I got a couple comments on Twitter. We were talking about downside potential targets, and they're like, this was about a week and a half ago. They're like, what are you talking about downside targets? This thing hasn't even made a high yet. I'm like, well, if you go look at our videos, you'll see why we're talking about that now, and why we're getting mentally prepared, because of the cycle and the timing and the degrees that we reached in a cluster. Mentally, you got to start getting ready for that. How do you handle that? What's your approach?
The approach is basically just sticking with the work, with the analysis, and whatever we choose to use as our indicator for the market, right? So not indicator as in an indicator in terms of a plotting one, but we need something that's going to indicate to us what the market is doing. And
I mean, one of the things is when you start seeing a change in character from the standpoint of, if you were getting higher lows and higher highs, and then you stop getting higher highs, that's got to be one of the first sort of signals that registers in your mind, correct?
Absolutely. So you got to get down to market structure, and you take it from the bottom, like you say, you're talking about all those numbers, 60s and 90s. So you have to keep on top of what cycles are running. So we know, just like we talked about, that potential 30-day run coming in crude. So you have to kind of mark those down. So, like, okay, we have a 30 coming up, just like up in here for 2 weeks. Now, if we only had one day, one cycle, we'd say, look, market ran up into it, but it's not, we should sell everything.
Right.
That's not really the way to survive in the markets anyway. Right. And the way I shift is, I kind of, not to sound too Zenish, but the idea is you have to really surrender to your work, right? To your knowledge, because that's the thing that's consistent. Markets are not consistent. Your mind certainly isn't consistent. So what's going to be real, what's going to be consistent, is really price and time. Time is consistent, and so is price. So that's how I came down to using squares. That was my sort of the logic looking back, right? And once you have that, so it doesn't matter if it's that or somebody using a moving average cross. You have to trust it completely, and you have to understand the odds of the system. And that when that system indicates to you there's a shift, then you have to follow. You have to sort of surrender to that, or you have to follow that, because that's your job. Your job is not to take a double, question your system. That should have been done a long time ago, before you sort of adapted the system, right? So when you're developing a system for yourself, you go through the process of testing and all this back testing. Why do we do that? Well, to see if we can trust it. Can I take the drawdowns? Can I take the stops? Can I take the risk? So once you can take the risk, and the odds, and out of so many trades, you're going to be correct so many times and not correct X amount of time, and you know the times you're not correct. So the reason I go back into that is that's what helps you keep your mindset fluid, right? Flexible. So you're not stuck in a bullish mentality or bearish mentality. You got to stay flexible. And the way you can do that, at least for myself, is to have some trust in your system or your tools. And once you have that, then changing the beat is not that big of a deal. And then you can really focus on, okay, well, going back to the S&P, we were looking for a high. What happens next? Well, then we need to have price action that would support that to show us that it was kind of a high. So in our case, we were looking at some price levels. And if the price levels held within that time window, then great. We continue to trade on the long side. If the price levels didn't hold, or it's mixed like it was for the last 2 weeks, we just stay put, focus on the short term, and we wait till we get clarity, right? We have to get clarity about what the price is doing. So part of the setting up your system, however, whatever tools you put together to come up with that system, it's supposed to give you clarity, right? I'm clear it's going up. I'm clear this is bullish. I'm clear this is bearish. So if it's going sideways, you can say, well, I'm clear it's going sideways, or you can say, I'm not clear. I'm not sure what's happening here. And in our case, like going back to, can you throw me the screen just for a second?
Yeah, but I think this is really important because you and I always talk about, we try to get to a point at a corner where we can say, okay, this market is bullish, so I'm looking for bullish trades. Or this market is bearish, so I'm looking for bearish setups. Because you don't want to trade against the trend, because that's an effort in futility.
Unless that's your system, right?
Right. Again, you're going to show an example of how you shift over.
Yeah, exactly. So when you get stuck in, okay, so all through here we were bullish till we get to like when we got to the 90 here, okay, we saw there was some resistance. We were waiting to see evidence. What is the evidence? Evidence is, well, here's 4150. Let's say what the evidence we want is that the price can hold about 4150. So when we first reached it, so let's take this area, right? For an example, this is really good because remember everybody was complaining how nothing's happening and falling asleep. And what did we say? We said, hey, as soon as this ends, we're going to have a hell of a run one way or the other. So be ready to trade it. Yeah. Remember that?
Yes.
And what did we get? We got a hell of a run and in one direction. So why did we say that? So, and how do we know that? Well, coming into the 4150, we weren't looking to short this, right? Pattern wise, anytime you take a snapshot of the market, you can come up with 5 different things you can be doing with it. You can buy it, you can sell it. But when we came up to here, I remember us being really cautious and say, well, we did have some cycles coming up in here, but let's wait for price to really show us the cards and show us the hand. And so we were waiting, we were focused on the short term. It was going up, really didn't take out 48.30. It was stuck between here. Then eventually it was able to take out 41.50. Actually, the timing came in here. Yep. Remember, 41.50 got taken out, came back, recovered right away. So here's the time you want to see is this. If you look at that pullback right there on May 31st, going into June 1st, there was your first sign of, hey, a pullback held above 41.50, right?
Yep.
We had one here, but it wasn't really a pullback. It was, this is like one up day, then it was kind of an inside day. So here we held it. And what happened next? We had really good follow through, got above this 42.25 area. And that was it. So once we cleared it, this is clearing. So you can see this bar is what we call clearing a level, clear at the level. And here we're holding it. I mean, if the market was weak, we would have come all the way back here to test it, right, Ben? Like we see it all the time. We'll come back here. The fact that we held it this far, above the main resistance, now support, told us, hey, this is going to really go. And how do we know it's going to go? Well, look at that, in spades, right? We gapped, bam, bam, and the rest is sort of history. So the point being, once we kind of came up to 41.50, coming up to resistance, at least the way we do it, we have to wait, and we're not clear. Are we going to keep buying here? No. Why not? Well, because we're up at resistance. Why are we going to sell it? No. Why? Well, we're not quite sure if we have a high in place. So then I call that like not being clear. So once you start to get clarity, once price start to, like in this case, we were starting to make higher highs and higher lows. We talk about it all the time. Why? Because that gives us a certain level of clarity to say, well, look, price is telling us something. And here's a really good example. We made a low, came up higher, higher low, higher high, higher low, higher high, higher low, higher high, higher low. You see how it works, right, Ben? That's kind of that's sort of the approach, right? You want to look at price levels, you want to be flexible, you want to go with the price. We're not trying to really get in front of the price. We want to go with it. And to go with it, we have to know when to step in to travel with it. So
in the Barrie, in the example you gave, is it safe to say, like, when you came up into this 41.50 area, you started turning neutral, and then you're waiting for the evidence? If we would have got stuck under 41.50, you would have turned bearish. But since we got stuck above, you remain bullish. You turn back to bullish.
Well, exactly. And the second, there's two parts to that. The one is we have a level. Okay, let's see how we do on that. And we know we were just mean diverting like crazy into this. We're wrapping around it. But overall, you want to look at these lows now, right? What happened here? Well, we had a low, higher low, higher low, higher low, higher high. So once we made this lowest low here, then you want to really start watching it. So I remember talking about this at the time. We had this low very close to 40.38, didn't quite get to it. So I was like, hey, didn't quite get there. That's kind of bullish. Still not clear, right?
Right.
But once we got to this, we made a higher low. As soon as we took out the prior high, we made a new high, came back, right? That's a higher low than this low.
Yep.
Well, there's your evidence. Then we made another high, clearing this, and another higher low. So if you read it, you can read it like a story, because your structure is really telling you what's happening internally.
Right.
And we use price levels as markers to give us like signposts, right? It's like a signpost. If you can cross this and still hold the pattern, well, great. Well, this was a really good story because it really took out each level methodically, and the pattern was really telling us it was going to go. Well, now let's go to where we are now. We had cycles expiring, I think, starting towards the late July, right?
Late July, yep.
And then we all the way into early August. Now, if we were to just take one of those and say, well, it's right here, it has to go down from there, otherwise I'm wrong. Well, price just kept going, and I don't know how you trade it, because it didn't quite go high enough to take the risk at this point, right? Especially at this kind of resistance. What we said was, hey, we're not really sure. There's a high potential for a high, but let's see the evidence. What's the evidence? Well, we drew up this little box and said, if it's above that, great. If it gets under that, well, we know what to do. And so it panned out. So as soon as we took out that outside day, low of the outside day, 45.50 or so, I mean, on Wednesday, that was sort of a sign. I mean, clearly price is actually the real thing. So we have to be flexible, and then we're looking for counter trends and for support to hold. And, S&P is always trying to fool you, man. They never make it easy.
No, that's true.
It's never easy. But if you look at the sort of the 30-minute that we use, you can see right here is when we got the real good evidence was right there.
Yep.
Up in here, even, it's holding about 45.95. Yeah, I'm not really sure. I'm not clear.
Right.
All right. But we have reason, but I'm not clear. But once we broke and we failed at the counter trend, okay, now we have evidence. Now I'm clear. I'm clearer, right? More clear, even more clear.
Yeah, probabilities of success are greater.
Probabilities start shifting. And once we took out this one, 45.54, well, a high probability that we're going to go lower. Then we started moving a little bit higher. So now we get into the intraday, playing the shorter moves, right? But looking at the daily, it's not that much difference. It's like the whole day for one bar.
Right.
So here now, and what I laid out earlier was exactly the same thing that we'll be doing, which is we're going to look to see how support holds. or not. If it doesn't, then we continue to be bearish. If it holds in here, then we look for the next counter trend, because next counter trend is really the key. If it comes up, here, fails below the levels we talked about, like what do we talk about? 45.70, right in that area, or even lower if it's weaker. And then we want to see after that, are we going to make a higher low, or are we going to go
lower lows?
Lower. So right there is really the time when we really know, right? Right now, it's still, well, that could be a counter trend, maybe not. Okay, especially it's holding the trend lines, it's holding. But if you really want to know, it's really the failure of the next counter trend is really the point. Just like we saw that on a 30-minute, but that's a 30-minute, right? So yeah, it adds to the pool of knowledge that we're collecting, pool of evidence. Yeah, that failed, great, but that's on a 30-minute. So we want to see that kind of evidence on a daily or a weekly. So and trusting that is what helps you be flexible. Otherwise, you can't doubt your system. Then that's not your system.
Right.
And when you doubt, that's when you try to override it and say, well, I'm bullish. I'm bullish. Based on what? Well, if you have evidence, great, be bullish. I'm bearish. Based on what? Based on your some evidence that you collected? Well, great. Obviously, we need both sides for this to work.
Right.
So,
Now that's good. I think it's an important topic, and I'm glad we talked about it, because I see a lot of people have trouble shifting when we get these inflection points, right? Not that they're perma bulls or perma bears, but if something's working for a month or 2 months or 6 months, you get stuck. You can get stuck if you don't have that system, as you describe it, that you're relying on to give you the signals and the biases you need to have. So I thought it was
something just to add to that. If not, let's say even traders, not even perma bulls or perma bears, the key is really being flexible and your system. I just don't know how else to put that, because whatever gives you that motivation to be bullish or bearish has to come from your perception, right? How you perceive the odds, how you perceive the market. That perception has so many variables involved, not to even include the news that we talked about last week, right? Which kind of distorts the entire picture. So taking in all those different variables, all the pieces, it's really the system that you develop, that you're comfortable with, that you tested, is the thing that would help you. And otherwise, what happens is the market has this automatic conditioning that happens. Over time, we get conditioned into thinking, oh, the bull market's going to continue. It's going to continue. And the other way, bear market's going to continue. So there's a lot of conditioning, and the comfort that we get, we get conditioned into being comfortable with.
Yeah. Well, listen, it always looks best at the top and worst at the bottom.
There you go. That's
the psychology we have to fight. Right. But anyway, we know we're going to be watching the S&P this week. Anything else you're going to be focusing on?
Well, the dollar, I think, is important. Crude is really important because we got potential cycle coming in.
Sure.
So dollar, crude, bonds are going to be important to see if we're going to make a lower high and turn back down.
Sure.
Or not. So those are crucial. And also, even though we didn't talk about the grains and all of that, they're still holding the lows, and they're just consolidating. So it's always good to keep an eye on those. Also.
Yeah. It's becoming prophetic what we talked about, Barrie, which is it is not going to be a dull August.
No, it's not going to be dull August.
This month is
September.
Yeah, the month is starting off with a lot of action, and it's looking like things are going to continue to be very, very active across the markets, commodities, bonds, precious metals, the stock indices. So rest up, everybody. You're going to need it. The next week should be action packed as well. Great show, Barrie. Everybody have a great week. We will talk with you all next week.
All right. Good job, Ben. Thanks. And thanks to you guys for watching us. And if you remember to like us and subscribe, right, Ben? Do all that.
That would be awesome. That would be awesome.
Yep. And you guys have a good weekend, and an awesome week next week. We'll see you later. Bye.
Take care.